Perhaps you're thinking about applying for a credit card, or maybe you just got your first one. Either way, that small piece of plastic can play a big role in your financial future. A credit card is basically a short-term loan. When you swipe it to make a purchase, the card issuer pays the merchant, and then you repay the card company. Pay the full amount by the due date, and you won't owe interest. Carry a balance, and interest charges can add up quickly. Your first card matters because it helps build your credit score. Lenders, landlords, and even some employers use that score to judge your reliability. Payment history is the most important factor. Paying on time, and at least the minimum, shows you can be trusted with debt. Another factor is credit utilization, meaning how much of your available credit you use. Keeping it under 30% demonstrates discipline. If you're just starting out, consider a secured card. You provide a cash deposit, say $300 or $500, and the bank uses it as collateral. Your credit limit usually matches that deposit. Making small, regular purchases and paying your balance in full each month shows you can manage credit responsibly. Another tip? Keep your first card open, even after you qualify for one with better rewards or a lower rate. The length of your credit history makes up 15% of your score, so an older account in good standing is valuable. Use it occasionally to keep it active. Finally, steer clear of the pitfalls. Credit cards come with fees, and interest charges can wipe out the value of rewards. The smartest strategy? Spend within your budget and always pay on time and in full. Handled well, your first card isn't just a payment method. It's a building block for long-term financial success. And once you've taken those first steps, there's always more to learn. So, stay tuned to Britannica Money for a daily dose of practical, unbiased insights for all stages of your financial journey.